if we look at also what's happening with new listings, and we can see that the supply is coming to market. So all the regions are essentially seeing an increase of 30% or more in new listing, which is adding pressure to the market and bringing prices down. So I think the supply, like we're addressing one factor in terms of bringing more supply to market, but that doesn't necessarily mean that everything coming to market is selling. I can show you this data over here, which I'm starting to track on a monthly basis.
Yeah.
It's essentially looking at the number of listings that were terminated and suspended. February 2022, where the market was still a little stable, total number of terminations in Durham was 205. If we fast forward a month, in March, total number of terminations were 692.
Yeah.
And then if we look at in April, we're at 439. So
Yeah.
we're tracking to be north of 800 listings terminated, and that's because people are listing with the expectation of generating January, February numbers, and they're not. Everyone's talking about, well, I'm hearing that the market's crashing. I'm hearing that the market's going down. Well, I think we can point to the fact that the market has already gone down, and if there are people out there who are waiting for a further decrease, I would say, stay active in the market because prices are going down, and this is where you should be trying to look for a deal and jump on an opportunity if there is any.
All right, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, and today we've got Saman Habibi to do the Oshawa market update for us. So Saman, why don't you tell us what's going on right now with Oshawa?
Absolutely. I'm excited to be back on the channel. Thanks for having me back again. Yeah, be curious to know, Adam, what do you know about Oshawa?
Literally nothing. Somewhere around Toronto, I think.
Somewhere around Toronto, right? Yeah. I think that description is fairly right for most people who are in the GTA. People kind of look at anything east of Scarborough as like no man's land, like no one really knows what's happening over there. And that's where we are, just east of Scarborough. But it's a pretty, big and upcoming area. Yeah, I'd love to just jump into it and show you what we got going on.
Love it.
All right, guys. So today we are going to be talking about Oshawa again. We do these every month, and not much changes. Not much has changed in the previous videos, but there are going to be some changes this month that we're going to talk about. So what I like to do is just take you through a Durham market update. Then we'll focus into Oshawa. Then we'll do a quick comparison between Oshawa and then the rest of the GTA. I'll do a quick April 2022 prediction as to where I see the market going this month. And then we'll briefly touch on Oshawa as an economy. So high level, the Durham region. So I guess before we get into it, we'll take a look at this picture over here. And I think what's nice about this picture is that it gives us a clear idea of the Durham region as a whole and what it entails. So if you look at that picture, as we spoke about Toronto, and then just east of Toronto, we have Pickering, Ajax, Whitby, Oshawa, Clarington. And just to the north of that, we got a couple other secondary markets as well. So what I like to do is just talk about Durham in general, so the red shaded area, and then we'll focus in on Oshawa specifically. So the Durham region average house is worth 1.148 in March of 2022. And that's in fact going down 6.5% from February 2022. And year over year, we would expect that number to be higher. So year over year, that's 27% higher versus March of 2021. No surprise there. If we look at Oshawa, the average house is worth $1,010,000 in Oshawa in March 2022, and that's down 8% from February 2022. And another clear indicator that we'd like to look at is months of inventory. So months of inventory is extremely low. So, this points to the fact that there's a supply issue, and we kind of see that across the board. The average days on market is around 8 days. So it takes approximately 8 days for a listing to sell in the market. And that's actually higher from the month before. So what I like to do is, put these numbers in front of you, because when I have investors or clients come to me and they talk about wanting to invest in the Durham region, they say, well, I'm open to looking at any properties anywhere in the Durham region. And my answer to that is, yeah, no problem. We can do that. But I can point to the fact that Oshawa has historically been the most affordable place to invest in when you look at the Durham region, right? So here we have Ajax, Brock, Clarington, Oshawa, Pickering, Schuylkill, Uxbridge, and Whitby. And if we look at the average prices, Oshawa would be in fact the cheapest. And another stat that I wanted to point out was the number of sales. So if we look at number of sales, Oshawa does have the most amount of transactions, which also makes it attractive for investors and end users to focus in on and hone down on, because it has the most number of listings and the most number of transactions. So the opportunity to get into the market in Oshawa is much greater than some of the other areas.
Yeah, it's crazy. About like almost 30% of the sales happened in Oshawa.
That's right. That's right. So here, what we like to do is just take a look at this map. And essentially on this map, we have Oshawa, Scarborough, Toronto, Mississauga, Oakville, Burlington. And what I like to do is I like to put what the average price is in these areas. And I like to point out whether this price has gone down or up from the previous month. So what I like to do here is essentially show you that the prices are dropping, and they're dropping the most in the suburbs. So if we look at, we have Toronto, and then we have all the markets just outside of Toronto. We have Oshawa, Vaughan, Brampton, Burlington, and those are just areas that are northeast or northwest of Toronto, and those areas that we can see prices have decreased, right? So everyone's talking about, well, I'm hearing that the market's crashing, I'm hearing that the market's going down. Well, I think we can point to the fact that the market has already gone down, and if there are people out there who are waiting for a further decrease, I would say, stay active in the market, because prices are going down, and this is where you should be trying to look for a deal and jump on an opportunity if there is it. So Oshawa is down, Vaughan is down, Brampton's down, Burlington's down, Scarborough is down, Mississauga is down, and then of course Toronto and Oakville have remained strong. Toronto is a fairly large area, and I think that midtown, uptown area is in high demand, and I think that's why we're seeing a price increase. And I would say Oakville is an ideal situation, because anyone and everyone with money wants to go to Oakville, and I think that's what is keeping the demand fairly high. I think people can kind of take a look at this picture and get a clear picture as to where Oshawa is in terms of proximity to everything. So we have all the highways, CN, CP, Pearson Airport. I think gives you a clear picture of where we're located. So again, going back to everyone talking about prices decreasing. So here what I've done a February to March comparison, just to kind of see what's happening in the market. Durham in general is down 6.5%, and Oshawa is by far the biggest quote unquote decrease month over month, from almost 1.1 million to 1.010 million. And we're kind of seeing this really relevant in the bungalows that our investors are looking at, because a bungalow that used to cost, $900K to purchase with a $100K renovation budget is now down to around $750, $800K, which brings us back to, I would say, mid 2021 prices. So the message here is that, guys, the market has corrected a little bit, and this is in fact a good opportunity to be trying to jump in and purchase something, because I'm seeing these opportunities come and go. And some investors are still sitting on the sideline and saying, well, we think that there's going to be more of a correction coming. Let's wait. And that theory might work well in the future. But if there's an opportunity where you can jump in and get in the market with little competition, then I would say this is the time to do that. Because in terms of competition, we're also seeing the number of offers on properties down. So, in January, there would be scenarios where bungalows were generating around 15 to 20 offers on a property. Just yesterday, I saw a bungalow that I showed an investor, and it only had 4 offers on it. So I think there is a shift. The investors can be assured that this is the data, and the data is showing that there's a shift. So I would say get active and reach out to me, and let's start looking at these, and let's start finding deals.
Yeah, I think that's great. I mean, never waste a good crisis, right? Like if the market is correcting itself, there's got to be opportunities, and more opportunities than there was when it was peaking. So There's certainly deals in every market. There's no question about that.
Yeah, and I don't know, and Adam, you're an investor yourself. I don't know what your thoughts are on correction or that term of buying the dip. Like as an investor looking at, let's say, a 6.5% or an 8% correction in the market, is it right to be active in the market and trying to buy at this point, or are you still trying to wait for more of a correction if the data suggests that there should be a bigger correction? And by data, I'm kind of referring to the interest increase, the increase in interest rates, and also more supply coming to market. So having that data available to you, are you comfortable purchasing, let's say, in any market where there's an 8% decrease, or are you more inclined to wait?
Yeah, like for me, everything hinges on my goals, right? Like, what are you actually intending to do with this property? What is your investment strategy? Right now, if you're always, to me, if you're always waiting for a discount to get steeper, like a bigger discount on a property, more than likely time is going to pass you, and you will have wasted a lot of time not getting in the market, and instead you're trying to time the market, and that almost never works out for people. And because if it did work out that way all the time, everybody would be multimillionaires in real estate, because we would just predict the next drop and we would buy the bottom and then sell the top. But that's just not how the world actually works. And if we're using fundamental investment strategies, like, we're using the BRRRR, we're looking for cash flow, we're looking to buy at the right prices, and even if it does continue to correct, we can still sell for profits based on doing strategic renovations like kitchens, bathrooms, landscaping, lighting, paint. If we're doing all these things, like, I don't see a reason to wait if there's a good deal in front of you. Like, a good deal is a good deal regardless of what's happening in the environment. Like, and sometimes we have to leverage a few more extra strategies. Like, maybe you for sure need to stage now versus just throwing your property up with like 2 photos and having 1 million offers. I think the fundamentals of real estate investing don't care about what's happening in the market, especially when we're talking about an 8% change that's month over month. But if we go back 2 or 3 years, we're probably up 20%, right? So, unless you really believe we're about to witness a 20% correction, in that situation, it might be more difficult to say I'm going to buy right now, but there's also going to be an inverse relationship to market rents when that happens. So if you see that big dump, we dumped 20%. Oh God, I can't sell right now. I was planning on selling. Good. Your market rents just went way up because nobody else can buy. Okay. If the market corrects that heavy, the bank's not lending. There's less people buying. And the fact of the matter is the price will get driven down. So long-winded answer, but I would still be buying, and I am still buying, actually, is my actual real analysis here. Like, we're closing on a couple properties shortly. So it's, I practice what I preach here.
Yeah, absolutely. I'm of the same thought. I kind of look at this and I say, okay, an average. Well, first off, you made a point about an 8% decrease. Where does that take us? That takes us to January of 2022.
Yeah.
So we're still up, and even if we spoke about going back a year, we're still up 22% versus last year. But I'm kind of looking at this data and I'm saying, okay, average price in the cheapest area in Durham region is $1,010,000, and clients can purchase the bungalow. So the traditional investment strategy in Oshawa is the bungalow to duplex conversion, and right now I'm seeing those anywhere from $700,000 to $800,000. If we say 800, we're in a very premium, nice A-type neighborhood with a very large lot that could potentially allow a garden suite. But anyways, let's go with middle of the range, 750. Put in 100K, 120K. You're at 850, 870, and your ARV should be around $1,050,000, $1,001,000. So the numbers do still work, and your rental income is around $4,000 to $4,400 a month. So the fundamentals from a numbers perspective work. I think people are so caught up in all the noise in the market of more of a price correction, that I'm seeing more investors sitting on the sideline and still waiting. And unfortunately, I think the sad reality is going to be most people are going to come to a realization when the market is climbing again. and when the buzz is
Yeah,
around purchasing. So
this is how everybody in every market always works, right? You want to start buying again when you're seeing that big uptick. Well, you've just literally bought again at the worst time. And I've seen this time and time again. Like, I've dealt with a lot of deals, hundreds of deals at this point, and we consistently see people that don't want to buy when the market's down, and they absolutely love buying at the top when things are flying and they're hot. And it's an interesting way to run your business because I firmly believe in the fundamentals, right? Like if you can buy a good cash flowing asset, it doesn't matter what the market's doing. You can sit on it for infinity and just wait for the right time to sell, or you can just, depending on what cycle of the market you're in, you just select the best strategy to execute on, right?
Yeah.
So I don't see any reason why somebody couldn't be buying right now.
Yeah, absolutely. What are your thoughts on these prices? Do they look outrageous?
Like personally, I don't really know enough about these markets to comment, but at the same time, like when I do look at these areas, when I do look around the GTA, I start asking myself like, philosophical questions about why would somebody live here versus living, further west or potentially further east, where you see those prices drop way off. Like I think London, the average house right now is like 700 or 800 or something, which, if I'm going to save $250,000 or more or better, almost $500,000 in some of these neighborhoods, I'm going to live in another major city. But I'm not everybody. My business is portable. I'm not having to commute to downtown Toronto where my offices are, where I get paid a wonderful salary. I'm not in tech industry or something that's like located heavily in these high dense areas. So I understand there's a lot of people here. The other thing that we just covered too, we just did the Toronto update with Emma Pace. And in the Toronto update, we looked at a chart with immigration and population increase versus the total supply of housing. And it seems very obvious to me that there's not enough density. There's not enough houses. There's a lot of people. And so when I look at this price and we're saying Oshawa is maybe $1,010,000, is that insane? Well, probably not. And it's probably the case that more people will continue living in Oshawa that are priced out of living downtown Toronto or, one of these core, like big major areas where the price is considerably more. So is it insane? Maybe, but it's all relative, right?
Yeah. And I think that density comment is a very good comment because I know that Whitby, which is a town just west of Oshawa here, the municipality there is actually stopping all building permit applications, with the exception of legal secondary suites. But what they're doing is they've stopped issuing a lot of permits because they're doing a density calculation because they want to start increasing the density along the corridor because there's just so much immigration coming into the Durham region.
So the chart was obnoxious. I mean, it hockey sticked up for population and supply stays basically flat. It was on a bit of an upswing, but like we're not talking about like population was literally a full on hockey stick. So I don't know what else you do about that other than build more houses, and we're not particularly efficient at that in Canada. Permitting process is slow. Trades are low, like low supply of tradespeople, potential supply chain issues with materials. Like there's all sorts of reasons why housing supply is not going to just double overnight. And I think all of those reasons are reasons why, you might see $1,010,000 and think, this could be a really nice time to buy and hold for a while, right? I think month over month, you could see yourself, like if you just bought in February and you thought you were going to just list it and resell it again today, you just lost 8%, but you were speculating, you were not investing if that's what you did. And and from my perspective, if we look at the chart and we go back just 10 years in Oshawa, what was the average price 10 years ago? Where are we today and where are we going to be in 10 years, right? This is not, real estate's never a get rich quick. It's a get rich for sure type of strategy, which just means it's slow and that's how the vehicle works.
Yeah. No, I agree. Oh, yes. So what I wanted to also do was, I think that this, the data here is just comparing the Durham region to the surrounding region. So we got York, Toronto, Peel, Simcoe. And I think that the narrative remains the same in that every market is essentially down with the exception of Toronto. And I think you made a good point that Toronto remains strong because of the need for people with employment to stay in that area. So if we look at also what's happening with new listings, so this is the chart, the data to the left is the same from the previous slide, but now we're just adding in and showing new listings, and we can see that the supply is coming to market. So all the regions are essentially seeing an increase of 30% or more in new listing, which is adding pressure to the market and bringing prices down. So I think the supply, like we're addressing one factor in terms of bringing more supply to market, but that doesn't necessarily mean that everything coming to market is selling, because we're so close to January and February in terms of those months being relevant for people to look back at. And unfortunately, some people did sell in January, February at very high premiums, and now people listing are expecting those prices, but they're not necessarily getting those prices. So supply is coming to market, but not everything is selling. And I think I can show you this data over here, which I'm starting to track on a monthly basis. Yeah. It's essentially looking at the number of listings that were terminated and suspended. So at the very top, we can look at February 2022, where the market was still a little stable. Total number of terminations in Durham was 205. If we fast forward a month, in March, total number of terminations were 692. Yeah. And then if we look at a year to date, month to date, in April, we're at 439. So yeah. We're tracking to be north of 800 listings terminated, and that's because people are listing with the expectation of generating January, February numbers, and they're not.
That's really interesting. And one of the interesting points actually Emma brought up in her review of Toronto is the possibility that when we're looking at these terminations, we're also seeing almost a double count where you terminate at whatever 1.8 million, and then you relist at 1.5 or 1.4 or whatever in hopes to actually sell. And then we're actually double counting that as a portion of the supply of listings, right? And so I think that's a really interesting insight. And this is good to know, right? Because this is telling us that realistically, we're heading more towards where a buyer might be happier than where a seller might be happier. But again, like it's just useful to remind people, like, what's the proportion of people that actually bought in the last 6 months or whatever that need to sell right now? It's probably a very low portion of people. Most people are probably, they've owned since before 2019 or whatever, and they're still selling at huge premiums. It's just, if you bought in the really short term and we're hoping to sell, you're maybe suffering from it. But yeah, interesting to see how these numbers are just doubling, right? This is almost exponential here.
Yeah, exactly. And unfortunately, I think, this is temporary noise right now. I think people right now, are trying to just capitalize and just throw anything to the market and see if it sticks. But I think this will just normalize eventually. And, we are getting to a couple months in the market where things are extremely hot as we're getting closer to the summer months. So I think the next month or two should paint a more clear picture for everyone.
Yeah, absolutely. And I think these little scare tactics that are kind of driven in the kind of broader media is really like a fad where you're like, oh, the sky's falling, the interest rates went up, I'm not gonna be able to afford anything. And then all these people go and they talk to their mortgage agent and they discover that, like, oh, actually, I really can still afford mostly the same product that I was looking at before. Then you add some seasonality in terms of people bringing to market their properties in the spring. And you see a little bit of a price correction just because of the supply increasing. And all of a sudden, this whole thing basically levels itself out, is sort of my perspective on looking at, after I've looked at all these different markets. That's how I'm looking at it anyways. So I don't think the sky's falling.
No.
Despite whatever the news will have you think.
Yeah, exactly. So April 2022 prediction. So what I did was I looked at Oshawa in specific, and I looked at what's sold to date so far. And so far we've had 176 properties sold, and the average sales price is $968,000. So month over month, yes, we do have a 4% decrease, which is nice for anyone who's still looking to get into the market. Perhaps you can get a bit more of a discount. But I would say, just because this average price has decreased, because our audience is majority investors, I would say that the typical investment property that you're going to purchase, the bungalow, those bungalows I'm not seeing a decrease in the same manner. So I'm seeing the bungalows essentially around the same price point that I spoke about, anywhere between 7 to 800K, and of course a little higher if you're in a nicer neighborhood. But I guess the overall message is the market has come down a bit more since March, 4.2%, but the investment properties are still trading around the 7 to 800K thousand.
Awesome. And I just want to clarify, because there's somebody in the comments right now grilling us on this video about this saying March 21. I believe you mean March 22.
Oh, yes.
To
Yes.
April 22. But leave that angry comment anyways. We like to read them.
So I want to take you here because every time we do these phone calls, every time we do these videos, I jump on phone calls with people, and I think people still have the wrong perception of Oshawa. Everyone is kind of, the media has painted Oshawa as GM town and a manufacturing town. And a lot of people are worried about Oshawa as a market, as an economy, because they still believe that the economy depends heavily on manufacturing, and therefore perhaps tenants and jobs may not be there. But this is data provided to us by the city of Oshawa. Every year they do a data analysis to see where employment is coming from and what the economy is made up of. I'm confident in saying that it's a very diverse economy, in the sense that close to 50% of employment has nothing to do with manufacturing. So we have healthcare, we have the Lake Ridge Health Networks, which makes up 5 to 6 hospitals in the area. And this provides a lot of employment and a lot of other services that feed that economy. We have educational services. So we have 2 universities and a college in the area, and that employs a lot of people in the area. And of course, retail trade. So we have a lot of small businesses and a lot of retail in the area that makes up 15%. So I want people to be aware that manufacturing is still present, GM is still here, but the economy is not heavily dependent on manufacturing. So I would say the economy is diverse and fairly healthy. And yes, we can argue and say that healthcare and education can take a hit when it comes to federal and provincial budgeting, but it's been fairly stable here. And in fact, there's been announcements made that the university is growing, the university and colleges are growing, and the healthcare industry is growing as well, and they're building more hospitals in the area.
I think there's not less sick people today than there were a few years ago. Not going anywhere. Yeah, that's good to note too as well, right? Because when people think of certain cities, I know a lot of cities get labeled. London's always got this crazy idea of what's going on in London too. And actually TD is the largest private employer here. So what are we talking about? Right. And nobody knows that, but guys, do your homework. If you're looking at a market, just this slide probably took 3 seconds of Googling to come up with, to just figure out that the city actually will give this data to you for free. You don't need to be a statistician to find this.
And absolutely. So this is a PowerPoint presentation that I have that the city's provided, around 40 pages in length, and it goes over the economy. And I'm happy to share with anyone who is interested and wants to go through it. I did want to make one point. You brought up a comment saying that we have supply. We have an increase in population. There's that hockey stick effect, and we're not creating enough homes to come into the market. There's a lot of red tape, and I think when the federal budget came out, they spoke about wanting to reduce the red tape and wanting to make it easier for municipalities to essentially move forward with development. I really hope that is true, because I've lost a lot of faith in our federal system right now in terms of what they can do with housing. But that is one policy that I'm looking forward to and hoping that it is true, because we see it everywhere, right? Even when investors here are trying to do the duplex conversion, having to go through that permit process, it takes approximately 2 months to get it.
Wow.
So if there's any way, or if there's anything that could be done at any level to make any of this process smoother or faster, I'm all for it. So if there's one thing that I hope that they can kind of, hit with a home run, is I hope getting rid of as much red tape as possible.
Yeah, agreed. I don't see any reason to regulate that as heavily as it is. I mean, I think there's a lot of value in making sure that the inventory that's added is safe for everybody, and that, there's not undue risk with fire safety code violations and stuff like that. And, you know, that's all one thing, but just the application processes and all of that stuff is getting in the way of what we actually need, which is more density and more housing, because there's definitely a disproportionate increase in population compared to supply of housing. So in the meantime, though, guys, that relationship is also an opportunity for everybody watching this. Like, it's problems or profits, right? If there's a disproportionate number of people and not enough housing for purchase, that means everybody's renting. When people are renting and there's a lot of demand for rentals, all that's doing is driving your price up and giving you upward pressure there. So, you know, it's not as if there are no opportunities in any of these circumstances. In fact, it's better for the savvy investor. So, hey, man, I really appreciate you giving us this update and showing me where Oshawa is on a map. And it sounds like Oshawa is, you know, potentially at a good time to purchase right now. It sounds like it's at a good discount. And if we extrapolate the data and we look far into the future, maybe not the next couple of months, but if we continue to look with a long view, it seems like an area that's probably going to benefit from this lack of housing supply and the increased population as well. So
yeah,
that's great.
Absolutely. Yeah.
So where can we follow you? Where can we get at you?
Yeah, absolutely. So best point of contact is through Instagram at Saman Habibi _real estate. And I also take on calls with investors anytime that they like through my Calendly link that we'll leave below. But yeah, otherwise, if you have any questions, you can reach me directly through my phone. Fairly open with that. My number's below and people can call me anytime they want.
Awesome. Thank you so much, guys. Make sure you're solidifying that power team. Saman sounds like he's got it all under control for Oshawa. So make sure you hit him up there, get on that Instagram, get on that Calendly. And if you haven't already, make sure you like and subscribe to this page, hit the little notification bell, because as the rules change, as regulations change, as the markets change, this is your place to get updates on that. So thanks again for following Canadian Real Estate Channel. I'm Adam JD Martin. You've just been listening to Saman Habibi about Oshawa. Have a great day, everybody.